Hi everyone, this is Dr. Good Vibe from OmegaSupreme.com. This is October the 12th, 2010 at 5:59 p.m. Eastern Standard Time. Let's go over today's currency, Forex news, trades, and commentary. Let's take a look. The big news today out was the FOMC meeting minutes. If we go over to Bloomberg, we can see in this news statement that I was just perusing, Fed officials were prepared to ease before long. So that's the big question that's been kind of coming up over and over again over the last couple of weeks. Will the U.S. Federal Reserve continue any sort of quantitative easing? Basically, any whiff of quantitative easing is good for emerging markets, high-yielding bonds, that's either corporate or emerging market bonds, as well as essentially the stock market in general. What does that mean? What does quantitative easing mean? It means that the Federal Reserve will continue to basically print money and continue with low interest rates, which is generally good for business, good for the economy, good for consumers in that they can borrow cheaper, they can spend more and borrow at a cheaper rate. Generally, this is done during times of recessionary times, depressionary times, in order to boost the economy. And so this is the big fear was if you can read into the minutes, the big fear was that the U.S. economy was slowing, and they were very well prepared to continue with any kind of quantitative easing program. What's kind of bad about this, what's not so great about this, is that this is in fact politicizing the Federal Reserve. They should be kind of outside of this type of behavior, but they're being political. They're basically there to prompt any kind of political move to increase the unemployment, or rather reduce the unemployment rate, and try to essentially boost the economy, when in fact their mandate is to keep prices stable. And at this point in time, prices are stable. Anyway, let's take a look at how this news has impacted the market. This is the S&P 500. The S&P 500, as you can see, has had a good day. It initially started to go on a downward side, but once the FOMC meeting minutes was released, it kind of popped up, which was positive for the S&P 500. And so remember that low interest rates is always positive for the S&P 500 and positive for equities. So we had a nice little pop for the S&P 500, and let's take a look at the VIX. The VIX, which is the CBOE Market Volatility Index, and we check this as sort of a gauge, as a fear index. This is during the flash crash. Anytime the VIX is above 40, that means that traders and investors are very fearful, and they're running into options for safety. If we take a look at the VIX today, the VIX kind of popped up and then kind of went really down to 18.49, 18.93 was the close. That's really low. Usually low VIX precedes high VIX. Remember that low volatility precedes high volatility, and high volatility precedes low volatility, as you can see here, 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 and before. Anytime you have record low volatility, something will happen, something interesting will happen. If you take a look at the CCI on the volatility index, on the VIX, the CCI was in sort of a is really low. It's in a very oversold condition, so that doesn't bode well. Usually it makes me think that we're going to see some high volatility very soon in the S&P 500 markets and options in general, which makes me think then that will traders become more fearful in the next couple of weeks, as really we've seen some really good times in the last month or so, with everyone piling into high-yielding emerging market stocks and bonds, as well as currencies. So let's take a look at the Euro USD and take a look. See, the Euro USD again has been kind of peaking and kind of being on its downward momentum, and this meeting minutes kind of pushed it back up, but not by a lot. Again, we're seeing lower highs right now. So though the meeting news was positive, it's still not seeing that reflected in the stock. We're not, or rather this currency, we're not seeing any kind of major move up above this right here, the 1.4 as a point of resistance. So that doesn't make me feel good about whether we're in a risk-on environment versus a risk-off environment. I think that personally, with the Bollinger Band, with that basically measuring the volatility, as well as CCI coming down to 0 and possibly crossing 0, I'm more bullish on the USD side than bullish on the Euro side on this, despite the fact that I don't trade the Euro. So it's making me think at this point in time that despite we've had a bump in the Euro USD, I think I'm going to be more bearish coming in the next couple of weeks. So let's take a look at my positions. And my Aussie dollar, as you can see, again started the day down and then ended the day up after the meeting minutes. I'm not too comfortable with that right now. I'm still up 548 pips on average, but if you watch my video yesterday, I said that I wasn't going to be adding on to any positions. I'm probably going to be holding. I may re-enter at this point right here somewhere around 0.95, but certainly won't be entering in any positions up here, as despite the fact that the Tenkan Sen still going to be still pointing upward. However, the Kijun Sen on the Ishimoku indicator has kind of flatlined, and so we almost saw a price cross the Tenkan Sen over here today. So not really feeling comfortable buying into any positions, adding on to my buy right now. Although I am still bullish on commodities and bullish on China, I feel that at this point in time we've exhausted this big run-up over the last month or so, and there's going to be some retracement going on, some major retracement down to the Kumo cloud on the Ishimoku. As you can see here, the CCI index is still overbought. It's been overbought for a really long time, so I think that there might be some exhaustion coming soon on the Aussie dollar. So not in the plans, not in the works for adding on to this position at all, to this long position that I've got. I'll probably add on when it comes down to 0.95. I'll look to see how prices look around that point, maybe when they reach the Kumo cloud around here somewhere on the Aussie dollar. But again, not adding to any positions on the Aussie dollar. Still going to be holding on. USD Turkish Lira, again, major retracement yesterday. In fact, my position over here that I had sold at 1.42 was in the negative and prior to the meeting minutes, and then came right back down. That worries me a little bit. I will probably close this position sometime tonight when the spread kind of closes a little bit, so that I do want to close some of that profit. I'm not in a sort of a risk mode right now. I'm a little risk adverse feeling, and I may actually re-enter, and I may sell a little more around here somewhere at this resistance point at 1.45. Or even 1.44 if price consolidates around that region. So not in the mood to, certainly not to add on to positions here. I will probably be closing a position, and just to be on the safe and secure side. The Kijun Sen on the Kishimoku indicator is flat. The Tenkan Sen on the Ishimoku indicator is flat. Not in the mood to add on to, and certainly not in the mood to add on to any positions at this point. Again, I may look to sell again at 1.45, 1.44, around there on the USD Turkish Lira. My second favorite, my first favorite, USD HUF, that's the Hungarian forint. Again, similar to the Turkish Lira, it was negative this morning, and this position right here at 1.983, that was negative, and the FOMC meeting minutes essentially push that one back into the positive region. Again, this position here will be a position I'll be closing this evening. I don't feel comfortable holding any negative positions right now that are going to probably, I feel, retrace back to 201.66 on the USD HUF. As you can see, the Tenkan Sun is flat, the Kijun Sun is flat. The Ishimoku indicators don't really give me a lot of good feelings about the long-term trend of this. As you can see, with price in general, we're seeing a lot of high-low bars with little movement of the actual close. So this means a lot of indecision in price. Basically, everybody's waiting to see what happens. And really, if you take a look, again, we're seeing a higher low, higher low, higher low. And so really the trend keeps closing. I mean, if I better be closing one of these positions tonight. And again, CCI, we're seeing CCI turn around, finally come off of that oversold position. So definitely going to be some profit taking here, and maybe even this one here. I may take both of these positions as well and close them out tonight once spreads close a little bit. Let's quickly take a look at my positions in general, how I'm doing. Today is October the 12th. My current realized profit and loss is 9.45%. My net asset value is 32.58% return. And my S&P 5, if we take a look at the S&P 500, it's up 5.06%, and the TSX is up 3.57% today. If we take a look at my trading Sharpe ratio, this is actively managing this account as compared to an S&P index fund. If you were to just invest when this account was started back on September the 13th, you can see Sharpe ratio of 4.52 versus an index fund Sharpe ratio of 1.71. So definitely trading the account is working, and we're getting some decent results. Yesterday I showed you the charting. Really, I don't need to go over that today. It's more of the same. So pretty good so far, good results, but again, fearful that really we're going to see some changes in the major trend. Also, I forgot to mention that my USD CAD position that I had put on yesterday in order to hedge against some moves against the emerging markets. I put it over here. It's currently negative right now, and let's take a look at my results. It's currently negative 31.4 pips versus positive 623 pips for my USD Turkish Lira, positive 968 pips for my USD Hungarian Forint, and positive 552 pips for my Aussie dollar. So I'm still going to hold on to this position, as I feel that the emerging markets will continue to close that gap, and the Canadian dollar will rise. If you take a look long term, this is a long-term resistance over the last few months. This is a daily chart. As you can see, there's some major resistance around 1.01, 1.008, around there. So a great deal of resistance, and I feel that we're going to see a solid bounce back up here, but we'll have to see over the next few days. Anyway, this is Dr. Good Vibe on October the 12th at 6:12 p.m. Eastern Standard Time. Thank you.